Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the usual picture with Bitcoin in terms of the short term and the long term, and give you a breakdown of the analysis of what may happen in the next few days and weeks. If I get a little bit of time, I'll try and cover some of the requested coins that I've had over the last few weeks. And I'll also try and cover the Bitcoin miners, namely Marathon and Riot. And as promised last week, I'm going to be covering an amazing Wisdom Bite, which will cover the topic of why the rich keep getting richer and the poor keep remaining poor. My idea has always been to add as much value as I can as part of your experience in the crypto space. And the wisdom bites that I do at the end hopefully will add that value. So many people ask me why I do a wisdom bite at the end of most of my videos. And the answer is very simple. It's not enough to make lots and lots of money if you don't have emotional and financial intelligence. If you don't have this part of the equation, which is the emotional and the financial intelligence, then you will squander without doubt this part of the equation, so you'll have nothing left. So the wisdom bites really covered this aspect, the emotional and the financial intelligence, in terms of arming us with qualities and skills and a thought process whereby we know how to handle the money that will hopefully come to us when we end up with a blow off top in Bitcoin in the next few weeks and months. So today's little clip in the wisdom bites is an amazing insight into what you can do to ensure that when you make a lot of money with Bitcoin or altcoins or whatever it is in this crypto space, then you're armed with the knowledge and the know-how and the emotional intelligence to be able to deal with that money so that there is very little chance of you squandering it. So whatever you do, I urge you all to watch the video at the end. It's only a few minutes, but it will literally transform your life. And it is knowledge that you will have for the rest of your life. It's not one of these things that you learn for a few minutes and then you forget about it. It is a message that you will have for the rest of your life. It's a video clip that I came across many years ago, maybe 12, 13, 14 years ago, and I still am affected by this message today. Indeed, my plans for the future after the blow off top are based mainly on the message that you will see in this video. I also want to take a little bit of time out just to say a very big thank you for everyone who is subscribed to this channel. I'm just coming up to 4,000 subscribers, which is a lot more than I thought when I first started this journey. But if you haven't already subscribed, then you'd be helping us to get to the 4,000 level. And it's my intention to add as much value as I possibly can in this crypto space for you. I would always urge you to watch other people's channels to do your wider research, which brings me to the disclaimer, that is that please remember everything in my videos is for educational purposes only and nothing should be taken as financial advice. So please do your wider research before you make any financial decisions. And with that out of the way, it's Sunday, it's time to put everything down, eyes on the screen, and let's get cracking. I'm going to start off with this chart that I showed you a few weeks back, and it's a chart that really shows that in the last 10, 11 years that we've had Bitcoin existing, there is a certain pattern that's been developing over that period of time, and that is that at the end of each year over the last 11 years, Bitcoin is either at the bottom of these log growth curves or at the top. And these basically follow the cycles that I've been talking about for the last year and a half, and that is the 4-year cycles. So what we have is, in the first 3 years of the cycle, the price action of Bitcoin tends to be at the bottom of these bands on the log growth curve. And in the final year, where we have a blow off top, it reaches the top of these bands. So this was the end of the first cycle. Then we had the second cycle. Again, we got the 3 bubbles at the bottom of this log growth curve. And then that was topped out by the blow off top at the end of December 2017. So the first one was at the end of 2013 in November. The second cycle, which ended here, in December 2017, and the current cycle, the third cycle we're in, we had 3 end of the years at the bottom of this log growth curve, and now we're expecting the 4th one, i.e. the blow off top, to be at the top of this log growth curve, which currently is at around about the $135,000 to $40,000 mark. So this chart in itself tells us that we haven't got to a blow off top. And in the last few months, I've been saying that the price action in the last 5 or 6 months of this cycle has had a strong correlation with what happened at the end of the first cycle here. So while we're waiting for the monthly close on the November to see whether that's going to replicate the November 2013 or whether it's going to be shared between November and December. And as people who are fluid and flexible with emotional intelligence, we've always got to keep neutral in terms of what the outcomes could be. Because remember, we can't determine what price Bitcoin should be or could be or would be. We have to respond to what the actual price is going to be. And our main focus should be on when is the best time to get out of this market. And we know from the exit indicators, which I'll show you a little bit later on, that when they all come to a confluence, i.e. more than one of them is showing the same thing, i.e. to get out of the market, then wherever the price action is, whether the price is at 150,000, 200,000 or 300,000, the exit indicators will give us the big signal to get out of the market. So if we have a look at the weekly chart here, and I've shown you this many times before, that we have a cup and handle pattern here. And we've been going through this pattern saying that once we break up the neckline over here, that will prove to be the catalyst for a massive move to the upside. This cup and handle pattern is one of the most powerful bullish patterns in any asset class. So currently on the weekly chart, as you can see, the all-time highs were made here. Firstly, we got this candle here, which broke this neckline to give us the highest weekly close of all time. And this candle was followed by the next all-time high at 67,000, but this was rejected in terms of being brought back to the neckline here. So that actually was a bullish sign that we've broken through the neckline and we're coming back to act for support. And in the last 3 weeks, as we can see, we've been making a series of highs over here. So when you look at the weekly chart, it's looking absolutely fantastic that we're now moving away from this neckline, having gone above it, come back and tested it as support, and now we're suddenly moving in the upward direction. And how quickly we move in this upward direction, only time will tell. But certainly, this is looking incredibly bullish, and to me, it looks like the launching pad for much, much higher prices. One of the other main reasons why I'm very bullish in this current market, and I feel as though we're going to have a very good end to the November and the December months, because we know that Bitcoin has a very strong affinity to Fibonacci numbers, especially the 61.8. And what I've got here are 3 Fibonacci numbered exponential moving averages. Namely, the blue one is the 8 exponential moving average, the yellow is the 21 exponential moving average, and the white one is the 34 exponential moving average. And this is on the weekly chart, by the way. And the reason why these are important, and you'll know from the Fibonacci numbers that they're all Fibonacci numbers here. And as you can see in the Fibonacci sequence here, we've got the 8, the 21, and the 34. And when you look historically at these 3 averages, you'll realize the significance here. If we move to the left, what we've got here is, after this cross here of the 8 over the 21 moving average, we got the sequence in the right order, i.e. 8, 21 and 34. And the reason why this is important, that it's got itself out of the tangle that it had gone into here, i.e. the 8 had gone below the 21 as well as below the 34. So this ended up being our period of consolidation. But once it untangles itself and the 8 goes above the 21, which goes above the 34, because if you look historically, as soon as we got out of the tangle over here, after the COVID situation, where we got the blue line, the yellow line, and the white line in this sequence, that was when the market took off. So as you can see, as soon as the blue line, the 8 exponential moving average, moved above the 21 and the 34, around this area here, those lines remained intact until they were broken here. So we had this massive run up before this bear rally that we got down here. If you go further back, in June 2019, as we got this 14,000 high, again, when it became untangled here, where the blue line moved above the yellow and the white line, again, this was our catalyst for a bull rally here. Similarly, at the end of the second cycle in 2017, the big bull run started all the way back here at this point where the blue line went above the yellow and the white line. So basically when they lined up perfectly, i.e. the 8 above the 21 above the 34, that was when the price moved up. And these lines never crossed until we got to the end of the bull market here. And that signaled the start of the bear market. So these exponential moving averages are extremely important in each of the last cycles that we've had. And we can usually use this 8 exponential moving average as a watershed, so that when the market goes above this, that is usually the start of the strengthening of the trend. And you may have noticed that when we did break the 8 exponential moving average, we found support on the 21 exponential moving average here. Now the strange thing with this is that in the last cycle we had exactly the same development just before we got the blow off top. If you look here, just before we got this blow off top, we had the breaking of the 8 exponential moving average, and we found support again here on the 21 weekly exponential moving average. And further along, we found support on the 21 again here when we broke the 8 exponential moving average. And at the end of 2013, at the end of the first cycle, once again, when we broke the 8 exponential moving average, we found support on the 21. So these 3 lines have been acting extremely in accordance with each other. So for those reasons, I'm expecting the Bitcoin price to be aiming for much, much higher, despite many YouTubers saying that we're going to be coming to the downside rather than the upside. So only time will tell, but I can only interpret the charts in my own way here. So whilst I'm expecting the price to go higher, we wouldn't be having a balanced view unless we can have a look at what the downside risk is. So let's have a look at the levels that we need to keep our eye on. The first level is this one here. And the reason why this is important is that if you take this line across, you can see quite clearly that these levels are very significant, where we got a huge amount of resistance here, support and resistance here, resistance over here, and no wonder we got resistance over here and support at this level. So this level is very important at the 58 and 59. I'm not expecting it to go down here, but it's certainly on the table. What I'm trying to say is that there's no need to panic if we came back down to these levels, simply because these are very strong support levels, and we would expect the price to bounce off this level to go back up. Am I expecting it? I'm not, but it is possible. The second level that's important is this level here, which is around the $53,000 mark. And once again, if you take the lines across, you'll see that these have been strong support and resistance levels. Over here, all along there, and of course over here. So if we should fall below the $59,000 mark, then there is a very strong probability that we're going to find support at the $53,000 mark. And these are the levels I've been giving you over the last few months anyway, since we had this fall down. Should we break this level, this is when I would get concerned, because as we were coming up, we were creating higher highs all along here until we broke down to these levels where we started to create the lower highs and the lower lows here. But once we got past this level here, at this point, we started to create the higher highs and the higher lows. And what these higher highs and the higher lows did was to convert and reverse the downtrend back to the uptrend here. For me, the line in the sand is basically this level here at the $39,000-$40,000 mark. In the unlikely event that the price comes back down to these levels, then I would seriously have to consider getting out of the market, because this would be unprecedented, especially in the bull market that we're in at the moment. So only time will tell, but these are the levels really we need to be looking at for the downside. I wouldn't be concerned at the 58, 59. I would start to get a little bit jittery at the 53. But once we break this level here, then I would have to seriously consider my position. And it may well be I get out of the market before we even reach the 39. Certainly for me, the 39,000-40,000 would be the red line in the sand for me. Am I expecting that? No, I'm not even expecting it to come back to the 58 level really. But it certainly is on the table along with the $53,000 mark. So let's have a look at the altcoins. We'll start off with the Cardano on the weekly chart. So basically we had this cup and handle pattern here, which I showed you at the time. And when we came back to the neckline over here, this was the time to get in here with Cardano. And we've had a massive run up since then. So from this neckline to the current price, we've had an 11.5x here up to this point. If we apply the three exponential moving averages, as I showed you earlier on, the 8, the 21 and the 34, it shows that the Cardano share has fallen below the 8. So currently there is a level of weakness here. And if you were waiting to get in, I would wait until we cross above the 8 exponential moving average before we can see some strength for the price to move much higher. So currently it seems to be hovering between the 20 and the 8 exponential moving average. And judging by this candle here, it's showing a rejection of higher prices. So if you're already in this, then you may be better off waiting and being patient until we move to higher prices. And if you haven't already got in, but you are waiting to get in to Cardano, it may be prudent to actually wait until the price goes above the 8 exponential moving average, which will give you a higher probability that we're now going to be moving into the higher direction. But certainly currently there may be other assets which are looking stronger than Cardano, but I still expect Cardano to do really, really well. And if we're looking at the end of the bull market price level to aim for, then if we take the Fibonacci extension tool from the low here to the recent high and to the current low, then it gives us these target levels here at the 4.236 level of $15.16 and at the 3.618 of $13. So anywhere between $13 to $15 looks like a reasonable price for Cardano to go to. But certainly I would expect the minimum to get to around the $10 mark here at the 2.618 Fibonacci level. A quick look at NEO. Again, we had this very good cup and handle pattern here to the neckline. And as soon as we broke here, this is where I recommended it. We've been as high as 146. So that would have given us a 5x growth from this neckline here. However, just like a lot of the altcoins, it's been showing a lot of weakness since the top that we got at 146. And if we apply the 3 exponential moving averages here, we can see quite clearly that NEO has broken above the 8 exponential moving average, as well as above the 21 and the 34. So this is showing signs of bullishness, and this could be the start of a big move up now for NEO. Only time will tell. Please remember, this is not financial advice. I'm just reading what I see on the charts. If we look closely here, the 8 exponential moving average, the blue line, is moving now towards the white line, which is the 34 exponential moving average. If you're a cautious investor, then you'd wait until the blue line went above the yellow line here to give some sort of confirmation that we're moving in the upward direction. If you're an aggressive investor, you'd want to move in now when you can see quite clearly that the price action has moved above all the 3 average lines here. But certainly this is looking more bullish than the Cardano share price. And if you were looking for a price prediction for the end of the bull market, again, if we take it from the bottom here to the recent high and to the recent low over here, this gives us a top price around these levels of 4.236 and 3618 of between $540 to $630 from the current $48. I think with the way the market has gone, these levels are less than what I would have expected 6 months ago. However, we have to always respond to what the price action is telling us. And this weakness that we've had in the last few months suggests that the top price would be around about these levels here, between $540 to $630. Certainly the minimum I would be expecting would be at least $398 to $400 here at the 2.618 level. A quick look at the Bitcoin miners. Marathon Digital Holdings. This is where I recommended everybody in December 2020 when the price was coming up to here. And I showed you this cup and handle. And as soon as we got above here, this is where I started to buy Marathon. And we've had a massive run currently from these levels all the way up to the current price of around about 13x here. And if we applied the 3 moving averages here, we can see quite clearly that once we broke above the 8 exponential moving average over here, we can see that Marathon has taken a massive rise to the top here. So this is showing very, very strong momentum to the upside. And as you can see with the 3 averages, they've lined up perfectly since we broke up here, where the 8 and the 21 and the 34 all lined up nicely from this point onwards. So this would have been an incredible time to get in around the August time. So the question is this still a good time to buy? Well, if we have a look at the Fibonacci extension and see where this could be possibly heading in the next month or two, if we take the Fibonacci extension from this low level here to the recent high and then the recent low, we can see that according to this, the top levels would be around about 229 to 265. The Bitcoin miners have an exponential growth element to them, by which I mean that they are mining Bitcoins at anywhere between $3,000 and $6,000. So while Bitcoin can be expected to grow by 2 or 3x from where we are now, I would be expecting Marathon and the other Bitcoin miners to be growing at a much, much higher rate. And my target for Marathon is anywhere around $400 to $600. And even those prices may prove conservative. So only time will tell, but certainly they're looking extremely good. And even at current levels, they look like a good buy. And finally, if we have a look at Riot blockchain, very similar to Marathon. However, this has been left behind by Marathon in recent weeks and months. So once again, we had this neckline with a cup and handle pattern here. We came up to this neckline. This was the time to get in at around about the $4 or $5 mark. And since then, we've had a run up to the high of around 17x. But recently, it has been actually showing a lot of weakness. However, if we put the 3 averages on this one, we can see quite clearly that this last week, we've moved further ahead once we broke in the previous week above the 3 averages here. So this is really at the beginning of a massive move to the upside. And what we can see is that last week we broke above these 3 average lines here and have consolidated this week with this massive candle here. So this looks like it's absolutely ripe and on the launch pad to go to much, much higher levels. It is my opinion, obviously not financial advice, but I think this is going to catch up to Marathon. And currently Riot is at around the $44 mark. And Marathon is around about the $75 mark. I believe there's a period of catch up to do in the next few weeks and months. So let's see how that develops. Okay, so on to the exit indicators. These are the indicators that we're going to be relying upon. When they all come together, they will be telling us to get out. And we're hoping that at that point, the price of Bitcoin will be at or very near the top of the current bull cycle. So what we're waiting for with the pi cycle is for the red line here to cross above the green line here. The red line is the 111 daily moving average and the green line is the 350 daily moving average. And as we can see, the red line is making a quick, sharp move towards the upside in the last few weeks. And we're hoping that when the price starts shooting up, then the red line will start showing even more of a sharper trajectory to the upside. And of course, that's based on the historical context where these 2 lines, whenever they've crossed, like here in the last bull market at the end of 2017, when they crossed, that was where the top was. And we've shown this many times in the first cycle as well, where there were 2 tops and there were 2 of these crossings. So certainly the pi cycle is moving in the right direction, but clearly we're not at the top currently. The second exit indicator is the 1458 daily moving average, and that's this green line over here. And when this green line crosses the red horizontal line, which is the peak of the previous bull cycle in 2017, where these 2 lines meet, this will be the top wherever this is going to be. So this green line needs to be crossing the red line, and that's based on the previous cycle when this happened. The previous cycle was in 2013, and when we drew a horizontal line there, the green line, the 1458 daily moving average, where that crossed was exactly where the peak was. So we're expecting exactly the same here, although we don't have many data points, but it certainly is a very good guide. And if this was to coincide with the pi cycle crossing over, then we would have a confluence of factors. And that would be a very strong signal that we need to get out. So the third exit indicator is the RSI on the monthly chart here. And if we draw a horizontal line at the peaks of these, we can see clearly that in the first cycle up to the end of 2013, we got 2 peaks here. And in the second cycle, at the end of 2017, we got 2 peaks there. And currently, we have only 1 peak. And we're waiting for this RSI, which has just raised its head above the 70 mark, we're waiting for this to come and peak up to this level here, around the 95, 96 level. And clearly it hasn't done that yet. There's a gap there. So once we get that, and it has a confluence with the other two indicators I've just shown you, again, that would provide an even more powerful signal for us to get out of the market. And of course, the log growth curve chart, where we're waiting for the price action to get to the top line of the log growth curve chart here. And obviously we're some way away from that, but things can move very, very quickly here. And once that happens, then we know we're at the top of the bull market. Okay, so only time will tell, but all of these are very powerful exit indicators that we're going to be keeping our eye on in the next few weeks. Well, I hope you found value in all of this technical analysis, and if you did, then please do remember to like and subscribe if you haven't already done so. Now for what you've been waiting for all through this video, and that is of the powerful message of why the rich keep getting richer and the poor keep getting poorer. Please listen very carefully to the message.
Hi, my name is PJ, and welcome to our short presentation. Have you ever wondered how the rich keep getting richer while broke people stay broke and the middle class seems to be shrinking? Well, this isn't nearly as mysterious as it may appear when you examine the specific differences in how broke people, the middle class, and the rich spend their money. Now, this is such a simple concept, yet so profound, it nearly knocked me out of my chair when I finally understood it. I'm going to show you exactly how the rich spend their money, and you can evaluate for yourself why they keep getting richer and the broke keep getting broker, and why the middle class remains so stressed out. Now, to get started, I'd like to review some financial terms we'll be using during this presentation. The terms that you need to be familiar with are cash flow, which means money you bring in, expenses, which means money you spend, assets. Now, this is the most confusing one. You're probably familiar with the traditional definition of an asset, which is something you own or have equity in. However, back in the 1990s, Robert Kiyosaki introduced us to a new definition of an asset in his groundbreaking Rich Dad, Poor Dad series of books. Robert taught us that an asset is something that pays you, and that's the definition we'll be using here. Liabilities is the last term, and it's defined as things that cost you money. As an example, a house is typically viewed as an asset, but can it actually be a liability? Yes, with our revised definition, anything that costs you money is a liability, not an asset. If you have a mortgage, your house is an asset to your banker because it pays him or her every month. But could a house also be considered an asset to you? Yes, in the right circumstances it could, when it pays you money. Let's say you buy a house and you rent it out, and it paid you a positive cash flow every month after all expenses. That would then be considered an asset. Now, one more time with the terms, just to be very clear before we continue. Cash flow is money you make. Expenses, that's money you spend. An asset pays you, and a liability costs you. Now let's take a look at how broke people spend their money. Now, when I say broke people, I'm not referring to the destitute. I'm speaking about that large portion of our society that lives from paycheck to paycheck and who never seem to have any money. In fact, most times there's more month left at the end of their money, and I'm sure many of you can relate to that group. On payday, broke people buy what I'm going to call stuff. Well, what's stuff? Well, that's inexpensive things that people buy that they don't really need to survive. You go into someone's house and you can't find any counter or tabletop space in the whole house because of all the stuff on it. Their house and their cars are full and cluttered with stuff. Well, where do they get all this stuff? They buy it at the flea market, at the garage sale, at the dollar store, at the craft show. So cash flow comes in and then it goes straight out the expense column to buy stuff. You see, broke people never really educate themselves on assets and liabilities. They justify buying all of this stuff by claiming that it costs so little. But over the years, it's all they ever have. The problem is their cash flow never produced or created more cash flow. Now, please understand, I'm not undermining or taking any shots at this or any group. I just see a lot of financial difficulty out there, and it really doesn't need to be that way. Creating wealth isn't a mystery, it's a formula. The only reason someone doesn't create wealth is because they either don't know the formula or they don't apply the formula. Now let's take a look at the middle class. The middle class is the group that society mistakenly thinks are rich. They're not. Yes, they typically earn a six-figure income, and many of them appear rich, but it's what they buy with their money that keeps them prisoners of the middle class. What they typically buy are liabilities. Remember the definition of a liability? Things that cost you. By buying liabilities, the money gets pushed up and out their expense column. Liabilities are items like cars, boats, houses, airplanes, credit card debt. Now, let's see just how this happens. The middle class gets a nice paycheck, let's say $10,000 for the month. They then split that down the middle and they pay their monthly expenses with half, and with the other half, they make a down payment on a new car. The car costs $5,000 down, and after they add on the insurance and the maintenance, that liability now costs $1,100 new dollars every single month. A few months go by, and they want a boat, then a vacation home, a Rolex watch on their credit card, a vacation on their credit card. And before you know it, their liabilities have raised their expense levels to near or above their income levels. They actually spend equal to or more than they make, meaning that they have to go to work and make a certain amount of money every single month just to cover their liabilities. The other important issue with both broke people and the middle class is that normally all of their cash flow is dependent on their own effort, meaning that they've educated themselves to exchange their knowledge and expertise for someone's money. Also, the money they earn is usually the highest taxed form of income. Here's an example. An attorney is knowledgeable about law, so people pay him or her in exchange for that knowledge on an hourly basis. The problem here is that if the attorney isn't sharing that knowledge with a client, then the attorney isn't making any money. This causes lots of stress and anxiety in their lives. And if you ever ask them to take an afternoon off to play golf with you, well, they very rarely can because of how much money it'll cost them to take that time off. On the surface, life's pretty good. The reality is that it's a roller coaster ride. That's the middle class. Now, I know this group very well because for a great deal of my adult life, that was me. Now let's take a look at how the rich people spend their money. Rich people acquire assets. Again, an asset is something that pays you. If you want to become rich, buy assets that earn you more money. The money cycle looks like this. Acquire assets that produce cash flow, invest the profits to acquire more assets that produce more cash flow, invest those profits to acquire more assets that produce more cash flow. The rich spend their money and acquire things that produce more money. Here are a few examples of assets that produce more money. Investments are the obvious ones: stocks, bonds, real estate. Education is another asset. If you learn how to do something that produces more money for you and you actually do it, that's buying an asset. There's a great quote that goes, "If you think education is expensive, you should see how expensive stupidity is." Another example of assets you can acquire that pay you are cash generating opportunities, especially those opportunities that can create a passive cash flow. Passive meaning that once you build it up, the money continues to flow whether you're still building it or not. Here's a small example. Let's suppose you bought a pinball machine and you put it in a barber shop and you don't spend any of the profits. You save them until you can buy another pinball machine and put it in another barbershop. This, by the way, was Warren Buffett's first business. If you don't know who Warren Buffett is, he's one of the top 2 richest men in America. The rich are extremely eager to find those passive cash generating opportunities because those opportunities continue to pay them month after month, year after year, long after they've stopped working the opportunity. You know, I see this happen again and again with successful entrepreneurs. They find a passive cash flow stream that they build up, and it continues to pay them month after month, year after year. They then take those profits and multiply them in another passive cash generating opportunity, and then again in another. In conclusion, here's what I've learned over the years. You can't find these passive cash generating opportunities unless you're open to hearing about them. Then, once you find them, you must be willing to see what fits you and then act. Now, the reason I say this is that I once answered a hokey little ad that I ended up generating 7 figures from, simply because I answered that ad and then took action. These opportunities are out there. You just need to find them. You also must be opportunistic enough that when the right situation does present itself, you don't miss it. So remember, broke people buy stuff, the middle class buy liabilities, and the rich acquire assets, preferably cash generating opportunities that can create passive cash flow. They then take that cash flow and invest it in another asset that produces more cash flow. That's the wealth creation formula.
Okay, so I hope you enjoyed that. Certainly it had an incredibly profound effect on my life over the last 14 or 15 years from a financial point of view. Now, if you're looking for some passive income ideas, then go over to Google and type in passive income ideas, and you'll get a list of literally hundreds of passive income ideas, and you can take your pick as to the ones that attract you the most. And then the world is just your oyster. So good luck with that. And on that note, we've come to the end of this video. And if you found value in this video, then please do remember to like and subscribe and turn on the notification bell. If you have any comments, questions, or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.